Good morning, everybody, on this Friday, November 15th. The markets are in the red. We're going to talk about that today. Some of it caused by markets were up so much in the last week. Another bigger part probably caused by Powell's comments yesterday that I'll review. Then I'm going to talk about, because I don't like to end a Friday on necessarily bad news of markets being down. I'm going to talk a little bit about deflation, and normally deflation for an overall country is a bad thing, but I'll talk about some prices of goods that have deflated for the month of October, so you'll know what's on sale. You'll know what's good. And then Corey's going to dive into, we want to look at some investing experts, Warren Buffett, Ackman, and he's going to dive into a little bit of what they're dabbling in, we'll say, with their major companies. So, but before we get started, I'll remind you this is a financial education presentation. You must do your own due diligence on anything heard in this presentation. More disclaimer information can be found on ankerstarwealth.com, which is our newly updated website. So take a look at that. And finally, the opinions expressed are mine and Corey's alone. So let me start off before I go over the markets and a little bit of a sell-off today. It's nothing to panic about, but I'm going to show you kind of the key comments that came out of the Federal Reserve yesterday. So Jerome Powell, Chairman Powell said, there doesn't need to be a hurry to lower rates. And what that means is if you were looking to buy a house, you want the interest rates to go down so the house essentially feels cheaper. But it's the same for companies. When they want to do expansions, they want to eventually get to the money. It doesn't come directly from the Fed, it comes from their banks, but they want to get the dollars cheaper. And the less expensive the interest is on dollars, the more investment can occur. And right now we're in a restrictive policy, which is trying to hedge off any inflation. But yesterday, Powell says this, we're not in a hurry to lower rates. And this is all this wording, communication, like kind of signaling to the markets, like we kind of plan on lowering the interest rate in December, but maybe not. Maybe it's not going to happen until next year. So the next step I want to show you is what happens when somebody makes a comment like that. Originally, the market believed there was an 80% chance the Fed was going to cut the interest rates a quarter point in December. But as of when he said that yesterday, it dropped down to less than 60%. So now it's almost like a coin flip. Now we don't know. So, the market's trying to digest that. And it's always the, is bad news, good news, all this kind of stuff. Is money getting cheaper to borrow? And that's really the thing. If the economy is doing well, the Fed does not need to lower the interest rates to juice the economy further and raise the chance of inflation. And the economy is doing well. I mean, it's doing better than expected. A lot of people were saying we'd be in a recession. We're not in a recession, at least not as of right now that we know of. Unemployment has been, October was a little low, but overall unemployment has been certainly acceptable levels. It hasn't shot through the roof. So when this happens, I almost call this I don't get some candy. So the market gets this like, oh my gosh, I'm not going to get the candy for free. I got to wait. And what we get is we get a little bit of a market sell-off. So and if you consider since the election, the market's shot up and we're not going below those, that point, it hasn't sold off that much, but you're getting a little bit of a reaction here. So S&P down 1.14%, and the NASDAQ 1.8. You could say, is this to be expected? There's always going to be volatility like this. So, we'll see what happens a week from now. And, I see headlines, the post-election rally loses its steam. And, we don't have a new president. We don't have new policies happening yet. We just have ideas of things that are coming. So it's nice the market popped a little bit, but we'll see what it does through the end of the year and then into next year. So, not to close on a negative note, which we do not like to see things in the red like this. We would love it if it went up all the time. But here, I'm going to show you a deflation breakdown for October. And I saw this and I said people might be interested. What things are going down in price for October 2024? Data's a little bit a couple weeks old, but turkey prices down 4%. Snacks, bacon down 3.5%. It's just interesting to see what's went down in price. I'll scroll down. So, hey, turkey going into Thanksgiving, and some of this is caused by supply and demand. Guess what? The people that produce turkeys know that Thanksgiving's coming up, so they produce more turkeys in anticipation, and things go on sale. Here's a big one. Gasoline down 12%. That's great. As far as if you are driving a combustion engine car, but some of it's supply and demand. There's less driving in the outside of the summer, so therefore the demand goes down and the price goes down too. I mean, it's kind of to be expected. But some other ones, I just thought I'd pull out some other telephone hardware. Hey, new phones come out, new technologies, and so prices do come down. TVs, that'd be another one. It's not on this list, but it is further down, down 4%. Car and truck rental down 7%. So you're just seeing men's suits. I'm not sure there's that much of a market for men's suits. I don't know how many people are rushing out to buy suits anymore. Used to be had to wear those every day. But anyways, I just thought people might be interested to see bicycles. Bicycles are down 3.5%. Maybe Pelotons have went up. I don't know for inside bicycles. So, Corey, anything that surprised you? Anything you're like looking at? Maybe used cars and
I was
trucks.
looking for, Mike, I'm a sucker for some bacon and egg breakfast tacos, and I saw my bacon, saw the bacon, but I can't find the egg. So, I don't know if I'm better off or not.
Well,
on the bacon we are.
I think I mentioned it the other day on inflation. Eggs were up like 30% year over year. Now, so
Wow.
you're
we'll
just gonna have.
time.
Maybe there's an artificial egg that you can buy. Maybe they say everything is better with bacon. So I don't know. I've heard of
Just start mixing bacon on some other stuff.
I've heard of bacon flavored vodka. I've never tried it. But would you try it? Maybe. So anyways, I will turn it over to Corey, and maybe he'll hear about Warren Buffett picking up a big stake in Hormel or something that buys bacon. I don't know. Go ahead, Corey.
Yeah, that's right. All right, let me share. So just real quick and I know Mike touched on this on the market. I just wanted to show you, kind of zoom out just a little bit. We're down today. This is either a 1 month or I think this is a 1 month chart of the S&P 500. You can see here on Tuesday, this Tuesday to Wednesday gap higher after the election, the market opened at around, the S&P, the SPY, which is a ETF for the S&P 500, opened at about $586 a share, and it kind of drifted up to 600, which we did pass 6,000 on the S&P. It's related that way, and now we're coming back down. So this is going to be an interesting test here. Can this island, this is called an island up here because we gapped higher into this new trading range. Will the demand pressure come back in at this $586 level? We're testing it right now. So it's kind of it'll be an interesting tell. What's also interesting is, people like to know, what is Warren Buffett doing? He's made so many amazing decisions over the years, and we just got his 13F, which shows us his trading activity for this recent quarter. Actually, the quarter ending September 30th. So a little bit, he could have continued making some changes, but this is the closest look we get. So we see he's been selling some things, some Bank of America, which again, that's a very $32 billion position. There's a million. They say there's a million reasons somebody would sell a stock. There's really only one reason for someone to buy a stock because they think they're going to make money. But yeah, he could just be right sizing these positions. And on that Apple position, he trimmed 25% of it. I think his initial investment into Apple was about 30 billion, and it got up over 150 billion, and he's still sitting at 70 billion. So he still has a much larger piece than he initially invested there. So again, could just be right sizing. Maybe he thinks that some of that growth will be a little harder to come by. The AI picture, who knows what they're thinking, but just interesting. We see he has two new positions. Pool Corp, which does supply the pool industry, like pools in people's yards, supplies there, and Domino's Pizza.
All right, Warren going out and buying some Domino's in his 90s.
That's right. Yeah, that's $500 million worth. So that's a lot of pizza. And we'll see what he does with those positions in the future. I was looking at, what's the other one, Mike? Not Domino's.
Papa
Papa
John's.
John. Papa John's stock price and valuation is pretty depressed right now, but Warren favors Domino's here. Domino's is viewed as the higher quality player in the space. Oh, and last thing, Ulta Beauty, he cut the position by 96% in the quarter, almost 0% of the portfolio now, and clearly saw something he didn't like with those trends there. What about Bill Ackman?
Well, I was going to say, I think Warren's, he's following, I don't think I've ever bought anything from Ulta, at least for myself. So therefore I would sell out of that. And I have been known to eat some Domino's pizza. My second favorite behind Donato's, but I don't know the Donato's trades at least. So go ahead, tell us what Ackman's doing.
Domino's quality, very, very quality and trading a pretty fair valuation. I might have bought some hairspray at Ulta before, but I don't have any receipts to confirm or deny that. Okay, Bill Ackman, he is aggressively adding Brookfield Corp, which is a Toronto-based asset manager. Brookfield, I had to look this up because I wasn't familiar, but that's real estate, renewable power, infrastructure, venture capital, and private equity, and that's a pretty big $100 billion company with quite a bit in revenue each quarter. So pretty big player there, and he's adding aggressively. And the other one, which you might have seen in a couple of your portfolios, he's aggressively adding Nike. He quadrupled his position in the quarter to $1.4 billion. So I don't know Nike's market cap. I think it might be less than 100 billion, and that's a pretty sizable position there. So just interesting.
Question: does Ackman, now I know Warren Buffett, I mean they do purchase some companies and change management clearly, and they're not doing that with Apple or Domino's, but does Ackman look more to, like, when he gets involved in a Nike, or probably not Chipotle, but when he gets involved, does he look to get somebody on the board and change management? I know there's some investors that do that.
He's done some activist investing before, but he's really managing a personal family fund there, and it's his money, and so he's kind of just doing what he wants, when he wants, and he's done a lot without the active investing too. He just kind of follows trends and looks for opportunities.
Interesting. Okay. Well, I mean, it is interesting when someone like Warren Buffett, and I mean, when he bought, I saw the note that he bought Domino's yesterday, or people see the same thing that you pulled up, Corey, and Domino's went up, I don't know, 30 points. It might have went up 7 or 8%. It jumped because Warren Buffett was buying it. Now, if we say that Mike and Corey are buying it for their portfolio, we don't expect any move. Nobody's like, oh my gosh, like those guys are buying it. But when somebody, starts throwing around 10, 15 billion dollars, it can actually change the market price and drive it up or drive it down if they sell. So, it's interesting to see, something to learn from, and obviously someone like Warren Buffett that is respected for, I don't know when he started what became Berkshire Hathaway. You know, but I know that he's been investing at, you know, 60 plus years, I'm sure. So with that, you know, let's hope for a green rest of the day. Let's hope the market recovers and we see some bounce. Some of what Corey showed you was a technical analysis, and there's certain holding points that we're looking for, whether it bounces off of it or if it breaks through, which breaking through to the downside is not what we want to see. But you could see that, you know, it's testing that just that day after the election, you know, results. So, you know, we'll see what it goes into going through the end of the year. That's all we've got. Have a great weekend, and we will be back with more. Thanks, everybody.